Good morning, good afternoon, and good evening, and welcome to this week's episode of Maconomics. I'm your host, Ross Mack, and I'm here to try to help you get to the bag. We got a new caller calling. Talk to me, what you get?
Hi, Ross Mack. How are ya? This is Jacob. I've run a few projections and have determined that the corona crash might lead to an eventual Rona rally. My sensitivity tables have helped me in the past, but I'm intrigued to know what Ross Mack thinks the coronavirus will do to my equity portfolio. What do you say?
Man, really good question, Jacob, and a very timely one, man. Right now, what you have is pure uncertainty. At times of extreme volatility in the equity markets, investors do not like uncertainty, and right now, we really don't know what's going on with the coronavirus. Are they going to be able to contain it, or is it actually spreading outside of China and coming westward, going to South America, North America, things we're seeing, right? But not only that, at the beginning of this past week, you had the CDC come out, the Center of Disease Control come out and say that the coronavirus is almost certain going to spread into the United States. And not only that, they also believe it's going to disrupt our everyday life. But the worst part is the fact that they're saying there's not going to be a vaccine available to at least another year to a year and a half. Now, what that actually means for your portfolio, it could be a number of things. However, I always want you to maintain a long-term investment perspective because we're long-term investors, right? So there's a number of ways you could kind of take some risk off by rotating across asset classes and other geographical diversification. But in the short term, you're going to first want to say, let me analyze my portfolio and see what exposure you actually have to China. Because China right now, the entire supply chain is starting to be disrupted. This is impacting their imports as well as their exports, right? So from an export standpoint, you're starting to see that the industrial plants are being shut down. Businesses are being shut down. So now you ask yourself, do you have any retailers that are actually getting either clothes or products assembled in China, right? A company like Home Depot, 30% of their products are actually coming from China. How does that impact their bottom line, right? There are a lot of other companies that also are doing business in China. You got Starbucks shutting down storefronts, right? But not only that, now you got to ask yourself, what does China actually mean to the entire world? Chinese tourism accounts for 20% of the global tourism. So now, what does that impact, right? That's going to have an impact on airlines. Not that many flights are going to be coming from China right now, not to mention if this pandemic spreads outward. So you're looking at airlines, hotels. In addition to that, casinos are also going to be exposed to this pandemic. So now that we actually looked and seen what our portfolio has, now it's about trying to find a way to actually protect our portfolio. Here, what we're going to see from the investors is that they're starting to have a flight to quality. A flight to quality is when investors are going to sell their perceived riskier assets, which are being stocks, and they're going to instead rotate and buy some of the safer assets, which are treasury bonds and gold. And now you have gold trading at its all-time high since 2011, right? And we've seen this pattern before. You had SARS in 2002, you had the dot-com bubble, you had 2008. Anytime investors are scared, they're having a flight to quality. You're going to see people buying treasuries and gold. So in conclusion, Jacob, if I'm in your shoes, bro, first thing I'm doing is analyzing my portfolio to see where there is exposure to China. If there's a lot of exposure to China, I might try to sell out some of those names and rotate into some safer assets, right? But I wouldn't just stop there because there's always an opportunity to actually make money, right? It might be investing in some of these pharmaceutical names, some of the healthcare names that are actually now producing vaccines or the guys that are actually producing the masks, right? There, you might also be able to buy some volatility because in times of uncertainty, volatility index always spikes. There's a plethora of things to do, but not only that, you might want to take a step back and say, what are the names that I originally liked? And if you still like those names for the fundamentals and you might just say the entire market is selling for no reason, then you might be able to buy some of those names at a discount because right now the market is always going to be on a clearance rack if you still like the fundamentals. Overall, man, thanks for calling in and I hope you make some money, bro. Next caller, talk to me what you get.
Yo, it's your boy Ross Smack, man, and thanks for tuning in to Maconomics. But I'm gonna need you to stop what you're doing and go download that Maconomics 101 right now. New project out, really gonna help you get to that bag. Whoa!